Welcome to Decoding China Tech, where we explain China's tech world for a global audience from the inside. In today's episode, let's break down what's really happening between the Meta and the Manus deal and what really matters. Today, there's one deal in the AI space that really deserves attention. A general AI agent company called Manus has announced today that it is joining Meta, essentially being acquired by Meta. According to market rumors, the valuation of this deal is about $2 billion. What makes this deal special is not just the price. Manus is headquartered in Singapore, but it is 100% funded and built by a Chinese team. And more importantly, Manus does not serve users in China. Its products are designed for global users from day one. So this is not just another story of an AI startup getting acquired. This is a phenomenal level case, one that could reshape how Chinese founders approach AI startups in the coming years, how they build companies and how they raise capitals, how Singapore's geopolitical role evolve in the broad US-China competition. Before getting into the analysis, let's quickly go through the key facts. On December 29, 2025, Meta confirmed that it would acquire Manus. Meta also stated Manus focuses on general-purpose AI agents would be integrated into its consumer and enterprise products, automated agent Meta AI that can execute all kinds of tasks and end-to-end with minimum prompting. In early 2025, a product demo video of Manus went viral on the internet. Some commentators even described it as the next DeepSeek. Graduated from Huazhong University of Science and Technology. Manus was founded by software engineer, a 33-year-old Chinese founded in 1992. He built several management tools for the WeChat ecosystem. In 2022, he shifted his focus to artificial intelligence and founded another technology company, launching an AI browser extension called Monica IM. This tool integrated multiple mainstream large language models and quickly accumulated millions of users in China, laying the groundwork for the next stage of the company. In March 2025, Xiao and his team officially launched Manus AI. It made a decisive move. It relocated its headquarters to Singapore, moved its team there, originally started exited China. In June 2025, the company According to Reuters, Manus raised around $75 million this year, at a valuation of roughly $500 million. The round was led by benchmark transaction other investors, including multiple media outlets, citing people familiar with Meta has not officially disclosed at over $2 billion in this deal. Some reports even suggest that this is Meta's third largest acquisition ever, smaller only than its acquisition of WhatsApp and Scale AI. So here's what we are looking at. We now have an AI company that was founded in China, grew popular very quickly, then abruptly moved out of China this year, and was soon acquired by Meta for a huge amount of money. It's really no surprise that this deal becomes phenomenon in China and attracted so much attention. There has already been a lot of analysis about its impact, but in this video, I want to focus on my three main takeaways from this deal. First point, this deal once again confirms the market value of the Chinese AI team, and it will attract more Chinese talents and capital into AI startups. At this stage, I think most people agree on one thing. The global AI race is really a competition between the United States and China. And this competition is not just about chips, data centers, or models. It's increasingly about people. We're seeing a very direct talent war. For example, Tencent recently paid a very high price to recruit Yao Shiyu, a former OpenAI researcher, into its AI leadership team. That's a very clear signal. Top AI talents, especially Chinese, has been repriced upward very quickly. Now look at Meta and Manus in this context. Meta did not just hire a few engineers, it brought an entire team, an entire product direction, and an entire execution capability. This is a direct cash out of a Chinese AI funding team at a global valuation level, and that matters a lot because it creates a strong demonstration effect. It tells Chinese AI researchers and engineers around the world, if you build something globally relevant, something that can actually be integrated into a big tech ecosystem, this is a very real path to massive exits. No 10 years later, no. Maybe someday, but now, this kind of signal will push more top Chinese AI talents out of bigger companies and into startups. Second point, this deal shows what may become the new standard structure for Chinese AI startups. For years, Chinese founders have talked about going global, but if we are being honest, many of these attempts did not really work. A few years ago when China cracked down on crypto and later on education tech, we saw a wave of Chinese companies moving out of China. Some moved to Singapore. The idea was simple: keep the Chinese team, move the headquarters overseas, and reduce political and regulatory risk. But in reality, this model often ran into troubles. The most obvious example is ByteDance. Even though TikTok's global headquarters is in Singapore, it's still widely perceived, especially in politics and media, as a Chinese company. So just moving your HQ is not enough. What makes Manus' case different is that it shows this path can actually work and work fast if you do it right. Manus wasn't just relocate. It was built to face global user, global revenue, and global capital from the start. And that's a key shift. This Chinese team plus global market plus international capital structure has some very clear advantages. You sell to global customers from day one, so paid revenue is much easier to achieve. Evaluation, both in private rounds and public markets, makes more sense globally. And more importantly, your exit options are clear, especially through M&A. For founders and investors, this is simply a more rational way to build companies today. Third point, Singapore's strategic value will continue to rise under the competition between China and the US. As competition between the two countries escalated from trade wars to financial decoupling and technology decoupling, and especially after the pandemic, many top Chinese entrepreneurs started rethinking how to allocate both business and wealth operations globally. Countries like Japan, Vietnam, Malaysia, and Singapore all benefited from this shift. But Singapore benefited the most. It offers something very specific: strong legal and regulatory credibility, deep connection to global capital, and a relatively neutral position in China-US tensions. That's why so many Chinese companies and founders now use Singapore as a base for global expansion. Manus is a textbook example. The company decisively shut down its China office, fully relocated to Singapore, and then moved quickly into an acquisition by Meta. That sequence matters. It reinforces Singapore's role as a practical launchpad for Chinese founders who wanted to build truly global companies. In other words, Manus didn't just sell itself to Meta, it also helped prove that Singapore is one of the most realistic gateway for Chinese entrepreneurs going global. These are my 3 key takeaways from the Manus deal. If you want a deep look into China's tech world, subscribe to Decoding China Tech. I'll see you in the next episode.